We're speaking about the standard route. In the standard route, the central vehicle for wealth building is the stock market. Advisors like Larry Burkett, Dave Ramsey, and Charles Schwab have advised using the stock market as a central vehicle for wealth building. However, it is our opinion and the opinion of many analysts that we should not have the majority of our assets in the stock market. We're speaking about the standard route in the investment market. What do I mean by the standard route? It's essentially the investment model that most Americans use. Larry Burkett, the late founder of Christian Financial Concepts, uses the standard route along with some preliminary things like eliminating debt, developing a budget, tithing, and saving. But essentially, he is advising people to invest in mutual funds. Dave Ramsey, the host of the Dave Ramsey Show, steps it up a little bit in that he raises the bar from 5% savings and 5% investment that we find in Larry Burkett upward to 15%, which is credible. He also advises investing in mutual funds. He mentions real estate, but does not go into much definition about how to invest in real estate. The third model, Charles Schwab, who was preeminent in discount brokerage, uses these pie-shaped graphs to illustrate conservative, moderate, conservative, moderate, moderately aggressive, and aggressive models. Essentially what we have here, on the conservative side, we have low risk with mostly income. In this case, it's 59% income. And on the aggressive side, we are seeing investments that go mostly for aggressive growth with only 7% set aside for income. And most Americans are using this formula of investing most of their money into mutual funds or the stock market. Now, this has been an effective wealth builder for many people over time. However, none of these three advisors speak about inflation and the impact of inflation. We need to really understand that our money is devaluing daily, and that in order to build wealth effectively, we're going to have a plan that is going to include, first of all, I recommend having the 1-year cash reserve set aside first. And then we're going to have to develop a plan. If it includes mutual funds, it should go beyond that to include investments that are going to hedge inflation. And the two investments that hedge inflation are investments in a business, but primarily the investments in real estate. The bottom line is that although the standard route of stock investment has proven effective for many in the past, we should not have the majority of our assets in the stock market. At a minimum, we should have some investment in real estate along with 1-year provision in cash in a bank insured by the Federal Deposit Insurance Corporation.